We are thrilled to have with us this morning Peter Hooper of Deutsche Bank, their global head of economic research. And I do want to mention that Dr. Hooper does not speak on Deutsche Bank policy and executive decisions. I think we need to get that out of the way, given the cacophony that's out there right now. How does a grizzled IMF pro like you follow U.S. China trade talks and the arrival of the Chinese delegation? How do you synthesize that?
Well, you know, the lines have hardened a bit this week. We looked at things after the news over the weekend, put out a piece on Monday saying we thought that there probably would see another step up in tariffs. I just don't see things backing off at this point.
Yeah.
That is going to be costly. It does mean a tenth or two on growth. But the big issue is what happens after that. Does this next salvo mean things start to get worse, or is this the beginning of really getting to the deal that they both want?
Marty, if you go over to the Council on Foreign Relations up on Park Avenue, there are grizzled State Department moments on the wall, great moments. Yesterday, we observed the President of the United States at a political rally bashing the Chinese before we're trying to get to some kind of deal. Let's be clear, this is unprecedented, isn't it?
Oh, it's totally unprecedented. And this president has made dealing with China one of the hallmarks of his presidency, egged on by people like Steve Bannon and Peter Navarro. And so, to your point, it does not look like, if this does not result in a positive development today, it may be a long time before they get together again.
But, Marty, does the president want a deal? Like last week, we were saying the president wants a deal at any cost. Does he think that actually not having a deal with China, that being tough on China, plays well with his base?
It definitely plays well to his base. But to the extent that Donald Trump has principles, this is a core one. He has said time and again he doesn't want any deal. He wants a great deal. He casts it as if it should be great for both sides. But there are some fundamental issues that he wants China to address that is going to be very difficult for them to do.
But, Peter, if we have China actually doing reciprocal things, right, so they basically put tariffs on U.S. goods, that hurts the U.S. economy. That hurts what President Trump is most attached to.
Yes. So the cost near term of this next step, if there's some retaliation, as I said, something like a tenth or two on GDP. The key issue is what happens in the months. If Marty's right, this is going the wrong way, and the cost could be considerably greater. If this next salvo is enough to get the two parties together, and there's every reason to think there's a lot of pressure politically that's going to happen, then this could blow over. I mean, I've been impressed that the markets have been taking this with relative equanimity so far. I think there is an assumption that this is going to blow over after the next salvo. But as you say, there are risks.